Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Gleeson, Senior Investment Strategist at Betashares, to discuss how Australian investors can tap the growth potential of global tech stock trends. Cam, it's great to see you as always. Welcome back to Trade Talks.
Hi, Jill. Great to be here.
You got it. And give us an overview of what you're seeing in terms of global tech stock trends.
So there's no question that the story of this year has been the incredible performance of the Nasdaq 100. That index is up 40% year to date, driven by some of those AI winners, such as Nvidia, up 200% year to date. And the leadership of those US tech stocks has been very, very extreme versus other names. We look at other, say for example, Chinese tech stocks, so Alibaba, Tencent, which are down about 10% year to date. Now, we know this AI theme has been well talked about. If we look at those large US tech leaders, they're the companies that clearly have the resources, have the capacity, and have been investing in AI for a long period of time. There's reports that development of an advanced large language model will cost around about $500 million by the year 2030. So that limits the pool of companies that can really lead in this technology. But this story of the ability to invest in new themes, in new innovation, goes back broader than AI. The spending on R&D by Nasdaq 100 companies versus the rest of the US equity market, it's up by a factor of around about 10. So around about 10 times the spending on R&D versus other US corporates. And that's adjusting for the size of companies. So we can go back through other trends. So we look through, for example, enterprise or software as a service, through cloud, cybersecurity, even social media and e-commerce. It's really this ability to invest in R&D, drive innovation, and what that has resulted in is underlying fundamentals growing far stronger than the rest of equity markets. So Nasdaq 100 earnings, for example, over the last 20 years have gone up by around about 3,000%. And we compare that to, for example, the S&P 500, earnings of the S&P 500 up around about 450%. So we can see that link between R&D spend, innovation to underlying fundamentals driving performance. Now, the outlook from here, in fact, for NDQ and Nasdaq looks quite strong. We look through, for example, corporate IT budget expenditure expectations for this year. The expectations is that chief investment officers, chief information officers are expecting to increase the amount they're spending on IT in the following year. So that's a great macro story for technology companies. And indeed, the other story is around interest rates, of course. Now, most people sort of think, higher interest rates bad for technology stocks, but it is a little bit more nuanced than that. If we see the performance of the Nasdaq in this rate hiking cycle and the last rate hiking cycle, we can see that those technology names underperformed at the start of the hiking cycle. But indeed, once the rhetoric turned from hiking to pause, we've seen, in fact, quite strong outperformance this time. And that was the same as what we saw back in 2019. So we think that strong US economic growth, underlying increased spending in IT, and this pivot to pausing and indeed at some point cutting is going to underlie strong growth in Nasdaq names.
How can Australian investors tap into this growth potential?
It's a good question, Jill. Our Australian equity market has only about 2% allocation to information technology as a sector, which coming from the US might sound quite low and obviously quite surprising. Our local bourse, our market is dominated by big miners and big banks. We're quite a cyclical market. Australian investors very much hold out our local companies for dividends, not so much growth. So looking at that exposure to the Australian equities, that creates a problem. How do I access some of these really strong underlying thematics? And one way is through ETFs. You can get ETFs that are tied to specific secular trends. So, for example, an ETF that invests in global cybersecurity companies, or an ETF that targets robotics and AI companies. So, particular themes, if you want to add that to your portfolio. But the flagship in terms of adding a technology exposure in Australia is the Betashares Nasdaq 100 ETF. So the ticker code for that on the ASX is NDQ. Now, this fund is one of the most popular ETFs available in Australia, and indeed was launched over 8 years ago, is one of the biggest ETFs available in Australia. Not surprising, very strong performance, very strong track record, very complementary for Australian investors.
And finally, Cam, what's the most effective way of tapping into these tech trends for an Australian investor?
So when I talk about the Nasdaq being complementary for Australians, what we're really talking about there is portfolio diversification. How do I build a core portfolio? If I know my Australian equities are going to be largely banks and miners, what can I draw from offshore, from overseas, that is going to complement that? And one thing, as I mentioned, we're quite short on in Australia, is globally leading IT names, the names like Microsoft, Nvidia, Apple, Tesla, and so on, that are in the Nasdaq 100. And a lot of Australians have chosen to add NDQ or Betashares Nasdaq 100 ETF into their core portfolio to broaden out that exposure, to add diversification. Indeed, we've seen net inflows or investments from Australian investors of over $2 billion in that fund. But I think what's more important is the value created. So over $1 billion in wealth creation or profit for end investors from this fund. The fund has been the best performing ETF available in Australia over the last 5 years. So it's a really good way of adding a growth style exposure to your Australian equities, and it does complement what we hold here in terms of the Australian equity market.
All right, Cam, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.